Welcome to InvestoSphere, the channel where we break down the complex world of finance in a simple, actionable strategies for everyday Americans. Whether you're just starting your financial journey or you're deep into building wealth, understanding how to use credit cards wisely is crucial. Today, we're diving deep into a topic that affects millions of people every single month: how to avoid paying interest on credit cards. Credit card interest can silently eat away at your financial progress. The good news? You can absolutely avoid it if you know what you're doing. This video will walk you through the core principles, essential strategies, and insider tips that banks don't want you to know. So grab a notepad, sit back, and stay with me to the very end, because this is going to be a full masterclass in avoiding interest the smart way. 1. Understanding how credit card interest works. Before we talk about how to avoid interest, we need to understand how it actually works. Credit card interest is typically expressed as an annual percentage rate, or APR. But in reality, it's calculated on a daily basis. Each day, your credit card issuer calculates the interest on your outstanding balance. So if you carry a balance, even for a few days, you'll get charged. Even worse, once interest kicks in, new purchases start accruing interest immediately. That's why paying in full is so powerful. The billing cycle usually lasts about 28 to 31 days. After that, you have a grace period, usually around 21 days, before interest starts accumulating. But if you don't pay your full balance within that grace period, you lose it. 2. Always pay your statement balance in full. This is the golden rule. To avoid paying any interest, always pay your full statement balance before the due date. Not the minimum, not just what you can afford. The full statement balance. Many people confuse the current balance with the statement balance. The statement balance is the amount listed on your last monthly billing statement. If you pay this in full by the due date, you won't pay a cent in interest. Set up automatic payments to pay your full statement balance if possible. If your income is variable, make it a habit to review your statement weekly and transfer funds accordingly. 3. Use grace periods wisely. Credit cards offer a grace period to give you a chance to pay your balance without interest. If you pay your balance in full each cycle, the grace period resets. But if you carry a balance, the grace period disappears and interest begins accruing immediately on new purchases. This is where many people get trapped. They pay most of their balance, thinking that's enough. It's not. Even a few dollars left unpaid can cause hundreds of dollars in interest over time. The trick? Think of your credit card as a debit card with benefits. Only spend what you can pay off each month. 4. Avoid cash advances completely. Cash advances are the enemy. Unlike regular purchases, cash advances start accumulating interest immediately with no grace period at all. Plus, they usually come with an extra fee and a much higher interest rate. If you're ever tempted to use a cash advance, stop and explore other options. Emergency savings, borrowing from a friend or family member, or even a personal loan. All of these are cheaper in the long run. 5. Use 0% intro APR cards strategically. If you're carrying debt and paying interest, consider transferring your balance to a 0% APR card. These promotional offers usually last 12 to 18 months and allow you to pay down your balance without additional interest. But here's the key: have a repayment plan. Divide your balance by the number of months in the promo period and set that as your monthly payment. Also, avoid making new purchases on that card unless they're also at 0%. This is a temporary solution, not a long-term fix. But if used wisely, it can be a lifesaver. 6. Make multiple payments each month. Even if you plan to pay in full, making multiple payments throughout the month can help reduce your average daily balance, which in turn reduces your interest if you ever slip and carry a balance. It also shows lenders that you're financially responsible, which could boost your credit score. A better credit score can earn you better interest rates, rewards, and approval odds in the future. 7. Budget and track spending. The key to avoiding interest is spending within your means. Use budgeting apps or spreadsheets to track every dollar. Assign each purchase a category and check weekly if you're on track. Impulse spending leads to balances you can't pay off. But with discipline and regular check-ins, you can keep your spending aligned with your income and avoid unnecessary interest. 8. Build an emergency fund. Many people fall into credit card debt because they don't have a backup plan for emergencies. Having just $500 to $1,000 set aside can prevent you from reaching for your credit card when your car breaks down or a medical bill shows up. The more you rely on savings instead of credit, the less you pay in interest. 9. Choose the right credit card. Not all credit cards are created equal. Some have lower APRs, better terms, or more favorable grace periods. Others offer cashback or travel rewards. If you know you're disciplined, a rewards card can work in your favor. But if you're worried about paying in full each month, opt for a card with a low APR and no annual fee. Read the fine print. Understand your card's terms. And if necessary, call your issuer to ask for a lower APR or better terms, especially if you have a good payment history. 10. Monitor your statements and due dates. One missed payment can lead to late fees, lost grace periods, and a lower credit score. Use calendar reminders, mobile alerts, or automated payments to stay on top of your bills. Check your statements regularly for errors or fraudulent charges. These can lead to higher balances, which in turn result in higher interest if unpaid. Let's recap. To avoid paying interest on credit cards, always pay your statement balance in full. Understand your grace period and never lose it. Avoid cash advances like the plague. Use 0% APR offers strategically. Make multiple payments each month. Budget wisely and track your spending. Build a safety net to handle life surprises. Pick the card that matches your financial habits. Stay organized and pay on time. By applying these simple but powerful principles, you can enjoy all the benefits of a credit card: rewards, convenience, security, without paying a single dollar in interest. Now here's a question for you. Have you ever unknowingly paid interest on a credit card without realizing it? What was the situation, and what did you learn from it? Drop your answer in the comments below. Let's learn from each other's experiences and build a stronger, smarter community. And before you go, if you found value in this video, please hit that like button, subscribe to InvestoSphere, and turn on the notification bell so you never miss a future episode packed with financial wisdom. Until next time, stay smart and take control of your financial future.